What's up, everybody? It's Amma Jamma here. We're going to go through a really quick little breakdown of this Nike chart. It is primed. It's ready to go. And I'm going to give you a list of the reasons I think that, why I think, and I'm on the daily. Let me put on the weekly chart. Why I think that this time is different. And what I mean by this time is different, I'm talking different than this time, and 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 this time. Why is it different? And no, it's not because we're peeking out on the candle just a little bit here. There's a few things for me that make it pretty different. It makes me really, really start to like this chart here, okay? So first off, we can see that we've got a 4-year, our 4-year point of control, 76.50. We've been kind of chopping on it for a few weeks, okay? But what I really like as well on this chart, if we back it up, and remember this is the weekly we're looking at here. What's different for me this time is, and I talked about this quite a lot with you guys a couple weeks ago, when we see really strong moves on some sort of swing like that, we love to get that pinched consolidation. And it's kind of like a squeeze. Not like a short squeeze, but it essentially is like a squeeze consolidation. And we have that on Nike right here. And what I mean by that is, as we hit our head, my line isn't drawn perfect, but as we hit our head and started to really bump up against this trend line, you can, first of all, make the argument that the trend line more like this, because I don't have it drawn perfect, and it probably should be kind of like this. All right, and what we like is when we came up to the trend line on the weekly, we didn't get an immediate door slam. All right, we're consolidating, we're getting pinched. And what we're getting pinched in is 3 different things. We've got this pinch going on. We're consolidating at point of resistance. And what the pinch is, we are sitting at or above the 200 on daily. That's number 1. Number 2, at or above point of control for 4 years, 5-year point of control. And then third, we are sitting at or on the 5-year trend line, 5-year resistance trend line. So we've got all 3 of these going on. And what that to me says is squeeze. Pretty much. It's a squeeze. It says we're tightening up and we're getting ready to unleash some fury. Because if you look back and if we look at this chart, every time we hit, this time we popped above, had a nice break, but immediate rejection. And yeah, we kind of floated around in here, but we can't pull back that much, reject and sit for that many weeks and not pop back up. But you can see here, when we tried to test it here, immediate rejection. Try to test it here, immediate rejection. Try to test it here, immediate rejection. All the way through. Try to test it here, immediate rejection. This one was the start of the trend, so I don't really count that. But here, where we're at now, we're not getting that. We're getting consolidation. We didn't just get this right here where it just shot up. We don't want that, okay? That is not what we want. What we want to see is exactly this, where we kind of peeked our head above it, okay? And then we kind of just chopped around right at it. Right at the 200. 200, not the 220. I don't know why I wrote that. Sorry, guys. But anyway, at the 200 and not at the... Oh, hold on. I got my draw indicator on. Let me back this up a little bit. There we go. All right. So not, and then not at that point of control. We're sitting at that, no problem. And that resistance line. So this is that consolidating, that tightening up. that we really like to see. It's like coiling up, and it'll pop. And we already got the impulsive pop on this candle. We got the pullback. Now we're breaking again. You can make the argument again. I want to reiterate, you can make the argument for this trend line to kind of vary where we're putting it, but we're right there. And I would not hesitate to say we're actually kind of breaking it. Another thing I really like on this chart, if we put on the daily, is, to me, this is a pretty strong, it's not perfect, but it's a pretty strong bullish right angle triangle. The higher lows throughout, but the touch points on top aren't perfect. But what I do notice about that, and what I do like, is that the candle bodies are perfect pretty much throughout these three at least. So we've got this right here. There we go. So that's really what we like to see. So now about targets, entry, this and that, we're already in Discord. What are we looking at for targets? How are we looking at this overall? So first of all, if you're like, I don't really think that's like kind of really a right angle triangle, I see it more as a pattern. Okay, that's fine. Then put your trend line like this. And is it going to be a megaphone? That's fine if it's a megaphone too. We have a pattern if we think it's a megaphone, or if we think it's a parallel. Like this. If we think it's a parallel, that'll give us a target right there. Target 1 up in that area too. But anyway, for target levels, what we're really looking at, and what we also love about this chart, is we have already come up and tested this area here. So I'm not concerned about that. We've got all sorts of nasty gaps. Most of them have filled. Once a gap's been filled, it's no longer a gap. It's a liquidity zone. So as we're looking here, let's identify some target ranges. So target range 1 for me, I'm going to put this on the weekly for target ranges because it's quite a choppy chart. Let's identify some long-term target ranges here, guys. So obviously target 1 for me is going to be right in this area here, straight across. And then I'm going to get rid of this line. And then target 2 for me is going to be in this area here. Make that yellow like the other one. There we go. And then from there, I mean, you know, sky's the limit. We've got all sorts of pivot points that I'm making my targets. As you can see, this one is also the low here. We can actually kind of move this up or down and make an argument for it. But I would say 81 will be my first kind of trim, maybe, and that on the short term. I won't trim January there, but I will slide that stop loss up. And number 2 is up in this area here. And then obviously number 3 is going to be here. Those pivot points, that's where we would look for our targets at. Where did we reverse directions? That's what I care about. Directional reversals when I'm drawing trend lines. I don't give a shit about trend lines within the trend like this right here. It does nothing for me. So that's kind of the target points I'm looking at. And as far as stop loss, I mean, if we take our stop loss below this weekly candle here of 74 or so, not for short-term contracts, for January plus or point of control is a decent stop loss. So if that's our point of control and we're already in from right about here, okay, and our true first target I'm looking at is approximately $86, 86 to 87. And my stop loss is this point of control. Even higher than that, honestly. I would put my stop loss at the loss of the weekly candle here. Didn't mean to delete that. And then once we get a trim off and you've locked up profit, then you can kind of pull your stop loss down to that point of control and then add our second target level on. And even there, it's at least like a 1 to 3, 1 to 4 risk reward on that. And we love to see it. So anyway, I'm really kind of looking and loving this trade here. If you're not already in, or if you're taking the trade here, we would really not want to lose the weekly candle. You know, like 75 or so to play it tight until we take some profits. Or if you're really looking for just long term, wait for the break of $80. Wait for the break of this top right here. You know, so you can do that as well. But I think this is a chart that is showing its stamina and its strength and acting a little different this time. As you can see on this weekly chart, we just really like what it's doing. And secondly, we're holding the 200. Almost every single one of these pops. This one was the curve up pop, and that was decent trade overall. And this was just our second touch point. So I'm not really considering this because I wouldn't consider it a trend technically, because we didn't even have a second touch point yet till there. But once we established trend by like this third touch point, we popped it once and couldn't hold. This is the first time we're actually holding the 200. And we've got 4 or 5 weeks above it. And we already came back and we retested it right here on that July 14th candle. So we're holding the 200. We're holding the point of control. And this impulsive, we already had an impulsive break out of it here. And that's the only other time we broke the 200, but we immediately came in, and this was just straight up an impulsive break. So if that's all that ends up happening is an impulsive break to $88 and we come back, that's fine. But I do like Nike here. I think it's a fantastic setup. Thanks for listening, guys. See you later.